That's crazy. That's half.
Bro, half of the loans were given to people who can't afford them. Wow. The income and employment verification only happened 4% of the time. All of this means that there's more and more customers starting to default.
What's up, everybody? Welcome to episode 33 of the Bag Talk Show. Today, if you are thinking about buying a car or already own a car, this is the episode for you. So we wanted to do something different, right? Essentially, this is going to be a reaction video about what Stephan actually had to say about the car industry on Twitter. So right now, the car industry is going absolutely insane, and he made an entire thread about it, and he wasn't the only one. There's a lot of different people talking about this, so we said, why don't we do some research and help our audience out, right? So basically what you're going to see on screen are his tweets, and you're going to see a live reaction from us thinking, do we agree with it or not? So let's just dive in. Let's go through the first one right now.
All right, bet. So the first one, he said the auto industry collapse has just begun, and this could be one of the worst times for you to buy a vehicle. Interesting, right? So in a normal market, auto loan delinquencies hovered around 2 to 3%. And he said that number is exploding, and nearly 1 in every 4 loans are defaulting in Washington, D.C.
Okay, right off the bat, I'm not going to lie to you, right off the bat, I think it's dramatic. That's my first reaction, right? Yes, we are in the auto industry, but a lot of times it's always the worst time to do things, right? I think that was my first initial reaction. Our auto industry, like, is it doing a lot right now? Yeah. Are the prices of stuff, particularly used cars, really high? Yes, we have seen an increase in used cars, but that's because of the chip shortage, right? We talked about this before on the channel. There's a chip shortage, which is what's used to actually build those cars. Like if you need to use Apple CarPlay, right, or navigation, all that is based on a chip. So if there's a chip shortage, that impacts the car, and then yes, now used cars go up. But I don't know about the worst times to buy. I wouldn't say that.
I mean, it's interesting though. Like I would say, he said like nearly 1 in every 4 loans defaulted in Washington, D.C. That's like 25%
right
of loans defaulting. Right, that's not no small number for defaults, bro. I'm not gonna lie.
That's fair. But that also tells me that actually might be good, because that means they're actually doing a check, right? That's what I think about. Like, okay, so we're not just giving out loans right off the bat. So that might also be a good thing.
I wouldn't even say that. That means they're
giving they're giving them out.
Yeah, they're giving them out. It's subprime lending, right? They're giving them out to people who can't actually afford it.
That's true. Okay. All right. So that's so far. Okay, let's see. Because I think sometimes it's overhyped, but let's go to the second one, right? The key issue that has caused this is how the auto loans are issued. Currently, Americans owe more than $1.2 trillion on auto loans, the highest in U.S. history, and a 75% increase from 2009.
Sheesh.
And that's wild. Given the fact that more than 85% of cars are financed, we are looking at a massive problem. Then he has this graph basically showing how much is actually due in the auto loan balance itself, which is obviously, as you can see, in trillion.
So you're saying that it's been a 75% increase in the amount of financings that's going out to cars, right? Since 2009.
Yeah, basically.
75% increase is a lot, bro.
Yeah, but I will say, right, that number is scary, right? Yeah. We obviously are seeing this, but that I think it also just, people are driving more, right? I think that also has to do with it. That's why a lot of people are financing cars. They might, there's always a debate. Do you want to lease? Do you want to just pay cash? Do you want to finance? So that might be a huge part of it as well. And then also, I will say that even though it's 1.2 trillion, and that seems like a massive number, this is why numbers could like play tricks on you sometimes, because the way he phrases it, right? The 1.2 trillion only accounts for what, roughly 10%, what you looked up, right?
Yeah, it was like roughly 10% of like the U.S. debt.
Exactly. So
consumer debt. Yeah.
If 10%, roughly 10% is the number that we're getting at right now, I don't think it's going to cause a huge crash to possibly occur in the market if this thing happens. Yes, that number is scary, but I wouldn't say a crash.
But it's kind of wild to me though that 85% of those cars are financed, right? So like 85% of cars are financed, bro. That kind of tells me like, you think everybody really qualifies for that loan for real?
Yeah.
Nah, it's a lot of subprime lending going on. And where did we see subprime lending, bro?
Yeah,
in real estate. That's what happened in 2008 when it came to real estate crash. You're giving loans out to people who can't actually afford them.
Yep.
And it crashed real estate, which crashed the whole U.S. economy.
But that's my point, though.
Right.
That's my point. I don't think this is real estate, because real estate, if you look at the chart we looked up earlier, right? If you think about it, it goes mortgages, and then it goes credit cards, and then it goes actual auto loans, and then it goes student loans.
Yeah.
So at the end of the day, like, yes, it is a big number, but it's nowhere close to what mortgages were.
Yeah, mortgages account for like, I think we saw like about 70% of consumer debt.
No.
that if we crash 70% of debt, that's huge versus just 10% of debt. I understand that.
Exactly.
I agree.
So I think so far what he's saying is accurate. It's numbers for sure, but I do think that we could take a step back sometimes because once again, if you're actually able to afford those cars, it actually works for you. And we know, being in the car industry ourselves, sometimes there's a lot of people buying these cars, right, that, they possibly can't really afford it, but they're not looking to afford it. They're looking to rent it out so they could pay it off. That also plays a factor.
Rent it out via like Toro and stuff like that?
Exactly.
Yeah.
Exactly. So let's look at the other one.
All right, bet. So he said he did some digging, and he said over the past 10 years, car dealerships have been making more profits from the financing of cars rather than the cars them actual sales. So he says translating from auto sale to loan sale businesses has resulted in a loosely regulated gray market. Bro, that's kind of wild to me.
That I agree with.
Right?
I agree with.
That's nuts that dealerships are making more money on the financing than the cars themselves.
I mean, just go to a shop, right? So we've been doing this a lot lately. And MSRP, right? The manufacturer suggested retail price.
Yep.
It's absolutely, well, for those who don't know, that's a sticker price, okay? That's what you see. Like, that's pretty high right now. It's insanely high.
Yeah.
So I get it. And these dealerships they make a lot of money just by finagling a lot of things. Remember I was showing you something one time? I wish I could go back and find the receipt. If I could find it, I'm going to put it on screen. Basically, it was showing how there's little fees charged on top of the car for cleaning. There's a cleaning fee. That's how they make money too. So dealerships will always find to make money, but this is a little scary though because the 85% does scare me a little bit.
Bro, it's nuts though. Like if they know they're making more money on the financing,
they're gonna continue to do that.
They're gonna continue to do that, and that's where greed comes in. Like I said, I keep seeing parallels to real estate. That's where they saw that, like, like Wall Street was seeing that. Oh my gosh, mortgages and mortgage-backed securities, right? We can make so much money off of people who are buying houses that can't afford it.
And that's the correlation. Like you
thing.
just said it. If obviously dealerships are making money on financing, they're gonna finance more. We just saw 85% of finance. It makes sense. They're gonna push you towards that, right? And I don't know if they're doing their best check on credit. I'm just going to keep it at that. But, there's stay tuned for that. There's a lot going on in this world.
Word.
All right, so next one. This was possible because dealerships successfully lobbied to have less oversight. All right, see, right there, I just paused. Notice how we said it before we read. This is a live reaction.
Word.
This was possible because dealerships successfully lobbied to have less oversight, meaning that there is no federal oversight with auto loans, unlike mortgages, student loans, and credit cards. See, I'm going to disagree. It's not unlike because in 2008, there actually was less oversight on the mortgages. That's what led this to happen, which is why everyone is comparing the auto industry to the mortgage and home industry.
Right.
To continue, reduced oversight allowed them to lend money without proper background checks. I'm going to keep my mouth shut on this one. Go ahead.
No, but you could dead see it though. Like literally, like why you think so many people are getting financed and why you think so many people are defaulting on their loans? Because there's no real regulation stopping these people from subprime lending.
Yep.
So you literally could see it in the numbers.
And listen, at the end of the day, like I know personally people that bought a car, right? And now they're struggling to pay it off. So now they're like, this is like $700 I have to pay. Well, I have to downsize. This is literally real estate happening all over again. The only thing that I'm going to disagree with is the portion size, right? Like, so I don't know how to really phrase it, but if something happens in New York, you know what? Perfect example, COVID. So when it happened in New York, New York is very small and populated, so it impacts it a lot more versus like a bigger, larger state, right? With a more ground that's really hard to populate. COVID's going to be there, but it's not going to be as noticed, right?
Right.
So that's the same thing. Right now, they're so heavily focused on car industry, but it's only 10%. It's not that big of a percent when it comes to the overall debt of the country.
Yeah.
So that's my thing. I don't think it's real estate, but very similar, of course. Let's continue.
All right, so an investigation in late 2021 found that up to 50% of the loans were given to customers who might not be able to afford them. Yo, what?
That's crazy. That's half.
Bro, half of the loans were given to people who can't afford them. Wow. The income and employment verification only happened 4% of the time. All of this means that there's more and more customers starting to default. Yo, so they only check income.
4%. That's what you're about to say, right?
Yeah, bro. They only check your income and your employment verification 4% of the time, bro.
Yeah, nah. See, this is what I'm talking about.
That's straight greed, bro.
What was the movie on the market crash in 2008? I don't know. There's two movies. I'm like blanking out right now.
I know what you're talking about, but I'm blanking out as well. I ain't gonna lie.
Yeah, we're gonna try to put that on screen for you guys. But essentially, this is a scene from the movie. Like 100% is a scene from the movie because it's like. 4%, you're not even checking. You're literally not checking. They're just coming in and saying, I make this much, boom, get me out of here, and they get them out of there.
And because why? Because they're making more money on the financing than the cars themselves.
Because at the end of the day, y'all have to realize these dealerships will make money unless we go back. Think about it. A dealership is low-key like a bank, right? They're giving you, bank gives you mortgages, dealership's giving you cars. Now, all of a sudden, I buy a car from his dealership, I can't pay it. He's happy thinking, okay, great. But if enough people default, it's actually going to hurt him, right? And now you might go under, and now your industry is going to be damaged. What about other people? You're just one. What about everyone else that starts going under? It could hurt. I'm still not going to call it real estate bubble, but it looks like there could be some type of car bubble. As long as you can afford to pay it, you're good. But if you can't afford to pay your car right now, you might want to think about downsizing and flipping your car because used values are up, trading in your car, giving it to someone else. Whatever you might have to do, I would think about it. Yeah,
I would say take advantage of the fact that, like you said, used cars are up, because if this industry does collapse, like real estate, you don't want to be stuck holding the bag. Like a lot of people right? Like a lot of people in the '08 crash, they bought houses overpriced that they couldn't afford, and by the time they had to default on their loan, you can't even get rid of that house because the price that you bought it at is now worth more than what it's worth now, right? Like when you bought it was worth more than it is actually right now, so you can't even sell it. Then you default, and there's a whole
then the spiral starts,
and then it spirals.
Literally, the next one we're just gonna keep on going down. The best performing state, Utah. Okay, Jazz. The best performing state is Utah with 4.5% of loans in default, whereas other areas are much. California, which is crazy because everyone thinks of Cali, everyone thinks of money, is 8.7%. Texas is 10%. DC is 23%, which makes sense because he was saying 1 in 4 is. He said nearly 1 in 4, right?
Yeah, nearly 1 in 4.
Yeah, so that makes sense. And then once payment is made more than 90 days late, the lender can repossess your car. Ooh.
So you can get your car repossessed if your payment is more than 90 days late. And the numbers in DC are appalling to me. Cali, Texas. These are the amount of loans that are in default, bro.
Yeah, and what makes me think about this, right? I'm thinking out loud here. Yeah. California, Texas, and DC. Would you say they're small?
Absolutely not. What?
They're huge.
Yeah.
So if this is happening in area, and honestly, I'm telling you right now, we have friends in DC. They make decent money, right? Yeah. Texas, they make decent money, and in Cali, they make decent money. So this is happening in these particular areas where money is good. Yeah. What happens to small states and cities?
Right.
That's what I'm thinking about. So this doesn't sound good. All right, let's just continue going right now. Go ahead.
So with more and more cars getting repossessed, higher gas prices, and rising inflation, we are seeing the used car demand slowing down drastically.
Makes sense.
We can observe the price drop in every single segment. Which makes sense. Like you said, like as they increase interest rates, that's the whole point of increasing interest rates is to slow down demand, right? We want to slow down. We don't want people to be like, oh, we could just buy anything we want. No, we want people to be like, oh, hold on, this is too expensive now.
Because what does that do? Can you explain to people when demand slows down? What does that mean?
We're going to lower inflation now, right? Boom. That's the lower inflation.
So now your dollar is worth more technically, right? Because that's literally what we're trying to do with inflation so high. You said it perfectly on that. Like demand needs to be controlled, and you can see right here. It doesn't look good, right? The graph is literally kind of showing you guys.
And this is exactly what happened in real estate in 08 because once they raised the interest rates, inflation was so crazy in that real estate bubble. Then they raised the interest rates. Then the house prices start to collapse because demand went down. Mm-hmm. So now you're stuck holding the bag. Same thing here. Demand is going down in the used car industry. Those people are going to be stuck holding the bag.
Boom. The next one is, I just saw right here, so I want to make sure we get this right. If we continue with the same trajectory, we would be due for an 18% decline in used car value.
Jeez.
So if you think about it right now, used car value is going down, right? We already know that the car industry is in trouble with what we're looking at right here. So if you, once again, cannot afford your car and you're looking to buy a car, let's just say you have a budget. You obviously are watching this video, so shout out to you. You should have a budget right now. If you do, don't be trying to flex. We said this so many times. Don't flex to buy a new car and then be like, I can't afford it down the line. Used car value is going down, or it's projected to go down, right? You don't have to get a 2022 model. You don't have to get a 2023 model. It gets you from point A to point B. Do that. Don't worry about impressing people.
Man, you going to impress them when you broke, I guess, because as these interest rates rise, it's going to get tough for you, because you're not going to be able to resell your car if you start to default on that loan. And then for people who have a variable interest rate loan, it's slow for you because I know you got them in the loans when the interest rate was low. Interest rates are going to be high for a while now, so good luck to you, honestly.
Refinance. Literally. Try to refinance that. Try to figure out something you can because you don't want to do the variable. We compared that to growth before, right? Remember that?
Yeah.
All right, go ahead. This one.
Throwback. Oh, right?
Yeah.
With the average price of a new vehicle rising up to $48,000, buying a pre-owned car might look attractive.
What did we just say?
Literally,
without reading that, what did we just say?
That just said that. So he said, if you can, postpone the purchase to see how this will play out. In the best case scenario, you'll be able to buy the same car at a 20% discount just next year.
I'm telling you guys right now. So we just, obviously, the car rental business we run, right?
Yeah.
So essentially, when we went to one of the stores that we talked to, the gentleman there literally said straight up, people are buying this car, and he told us, I'm not going to go into crazy detail, but he told us this car is not worth what they're buying it. It's not.
Yeah.
And it's crazy because imagine someone telling you that. Like, we're cool with him until that happened. But someone else that buys that car, you're buying it for 60, bro, it's really worth like 45, 43.
Yeah.
And then when the market crashes, I mean, if it crashes, right, what's going to happen?
Yeah,
so now you go downhill.
That's tough, bro. That's tough. It's nuts to me. I just keep thinking about real estate. That's all I can think about.
Literally. So our final thoughts on this, tell me if you agree or not, right? Mm-hmm. I would say I agree with Graham Stephan on this, 100%. Shout out to him for doing this research. Shout out to him for actually making this thread right here. This is our first time doing this video, so let us know if you like it. But essentially, I agree to the point that it could be a bubble. I don't think it's going to be as massive as real estate because it doesn't control as high of debt when it comes to consumer debt, right?
Yeah.
So I will say that. However, if you're looking to buy a car right now, be careful. Look for deals. Look for things you can afford. Or just go down the used car route.
Yeah, and it just kind of reinforces to me just like, I guess, human nature or just the nature of like Wall Street, right? Whenever Wall Street gets involved in the industry, as long as things can be manipulated, they're going to manipulate it. We've seen it with real estate. We've seen it with the banks at a point. We've seen it with the internet bubble. We've seen it here with the car industry. We've seen it with crypto. As long as greed is involved, manipulation will be rampant. And so that's exactly what's going on, and we'll see how this bubble pops and what happens.
Yeah, absolutely. So once again, if you're still watching, thank you. We appreciate you. Make sure you like, comment, and subscribe to the channel. Plus, hit that little notification bell because we drop
2 videos a week.
And you don't want to miss them. Make sure you check out our video on Monday. But until then, peace.
Peace.